Supply in special cases. This article outlines specific situations where transactions, which might otherwise be considered supplies of goods or services under Article 5 and Article 6, are instead excluded from the definition of supply under the UAE VAT law. These special cases are important because they are not subject to VAT, provided the specific conditions are met. The details of these special cases are explained below. 1. Sale or issuance of vouchers special treatment. A. As an exception to the general rule, the sale or issuance of a voucher is not considered a supply under this decree law. B. This exclusion applies *** only if the consideration, payment, received for the voucher does not exceed its advertised or stated monetary value. C. A voucher typically refers to an instrument, physical or electronic, that can be used to obtain goods or services in the future. This may include gift cards, discount vouchers, prepaid service coupons. D. However, if the consideration received for the voucher exceeds its face value, monetary value, the excess may be treated differently under VAT rules, as clarified in the executive regulation of this decree law. E. Additional conditions and exceptions related to the VAT treatment of vouchers are provided in the executive regulation, which businesses must follow. 2. Transfer of a business, or an independent part of a business, special treatment for business transfers. A. When a person transfers the entirety or a clearly independent part of their business to a taxable person, a VAT-registered business, the transaction is not considered a supply under this decree law. B. This special treatment applies only if the purpose of the transfer is to allow the receiving business, the transferee, to continue operating the transferred business. C. This exclusion covers transactions such as sale of a complete business as a going concern, carve-out and sale of a self-sustaining business division, business mergers or acquisitions where the acquired business continues under new ownership. D. This provision exists to ensure that genuine business transfers for continuity purposes are not unintentionally taxed, in line with the principle that VAT applies to economic consumption rather than restructuring events. E. Further details and conditions around such transfers are specified in the executive regulation of this decree law, including defining what qualifies as a whole or independent part of a business, documentary evidence required to demonstrate eligibility for this exception, circumstances where the transfer could still be considered a supply, example where the transferred business ceases to exist post-transaction. 3. Other specific exclusions listed in the executive regulation. A. In addition to the cases specifically mentioned in this article, other transactions or supplies may also be excluded from the definition of supply if they are explicitly stated as such in the executive regulation of this decree law. B. This allows the executive regulation to respond to specific industry practices or economic situations where VAT should not apply, even though the transaction could otherwise resemble a supply of goods or services. C. Businesses should always consult the executive regulation to stay updated on any additional special cases that may apply to their sector or business model. 4. Why this article is important. A. Excluding these special cases from the definition of supply ensures that VAT is applied only to true taxable economic activities, and not to internal administrative movements, example, transfers of whole businesses. Instruments like vouchers which are placeholders for future supplies. B. Misunderstanding these rules could lead to overpayment of VAT, incorrect VAT returns, penalties from the Federal Tax Authority, FTA. C. Therefore, businesses should carefully review this article along with the related executive regulation, ensuring compliance when dealing with vouchers, business transfers, or other special case transactions. For more details, contact us.